Now, the race to build the future of money is officially on, and the world's two largest economies, the US and China, are taking wildly different paths on digital currencies. In the US, President Donald Trump has signed the Genius Act backing private stablecoins, digital dollars tied to the US dollar. Earlier this year, the administration took the opposite path by banning a government-issued digital dollar. It's a clear sign that Washington is betting on private innovation to lead the future of finance. Across the Pacific, China is charging ahead with its own plan, a government-controlled digital yuan, e-CNY. From the cross-border mBridge project to embedding the e-CNY in the Belt and Road Initiative, Beijing is rapidly scaling its reach and has just opened a new International CBDC Hub in Shanghai. In its early trials, China's e-CNY logged around $14 billion in transactions. Fast forward to mid-2024, and that number has surged to $7.3 trillion. Stablecoins like USDC and USDT have also grown fast, now reaching a combined supply of $250 billion. But cryptocurrencies with a market cap of $4 trillion are fueling the rise of stablecoins and pushing the whole sector forward. And this isn't just tech, it's a battle of financial visions. The US bets on private stablecoins to keep the dollar dominant, while China's digital yuan aims to challenge that power head on. And whichever wins could shape the future of money worldwide. Let's get more on this now with Mark Humphrey-Jenner in Sydney. He's an Associate Professor of Finance at the University of New South Wales Business School. Now, Mark, the US is backing private digital dollars over a centralized currency. What could be the impact of letting the private sector lead this financial revolution?
Well, firstly, thanks for having me. And with the US backing, well, really private stablecoins, they're betting on the private sector innovating and therefore improving payment infrastructure. So getting rid of some of the cumbersome aspects of payment infrastructure that might have been holding things back before. So in theory, for example, it could be possible to do this without stablecoins. So to improve the speed with which transactions occur, improve security. However, there's a lot of, I'll call it bureaucracy in the payment systems that central bank digital currencies or stablecoins help to clear up. Now, by focusing on stablecoins, it's basically putting the ball in the court of various banks and enabling them to compete amongst one another for what is going to be the best solution. You compare that to, say, a central bank digital currency, where it effectively assumes that the government infrastructure is going to ultimately be the most efficient. It's really two different approaches to trying to say, or solve rather, a similar problem.
Now, on the other hand, China's digital yuan has seen explosive growth. How is Beijing using this e-currency to challenge the US dollar's dominance in global trade?
Well, it's certainly an interesting, different approach, and it really comes down to the normative differences in how the United States and China are approaching things. So in particular, there's large swathes of the Republican Party that particularly dislike central bank digital currencies. President Trump said that he would not bring one in, and various Republican members of Congress have tried to pass legislation that would outright ban a central bank digital currency. And this is for normative reasons, i.e. fears that the government might debank people, that is, remove banking infrastructure or payment services from various individuals or corporations, and the fear of ideological control from a central government. China, by contrast, is taking the opposite approach. Now, that would give more control to the central government, which could potentially enable the government to limit payment acceptances or sendings from various individuals or businesses, gives more control to the government. Now, certainly that is unsurprising given China's approach to the banking system. In both cases, you're getting significantly faster payment speeds and potentially more control and transparency over to whom payments are being made. However, China's approach gives more control to the government, which has pros and cons. Certainly it's the approach the US has tried to stay away from.
Now, we know that the cryptocurrency market is currently at around $4 trillion. How does the volatility of crypto impact the stability of these new digital dollars?
Well, the crypto market in general has been incredibly volatile, but there's a lot of different sectors of the crypto market and a lot of different aspects, ranging from, say, Bitcoin through to Ether through to the meme coins. Now, the meme coins, of course, are in their own universe. They're incredibly volatile. Bitcoin, which is really the other end of the extreme, is less volatile than many of the meme coins, but it is still quite volatile. And we've seen that play out this year. It's up about 25 or so percent throughout year to date, indeed about 14% over the past month. However, it has been incredibly volatile during that time period. Now, the stablecoins, in theory, should be significantly less volatile still, and the volatility really should just be related to what the US dollar is doing. So if the US dollar is incredibly volatile, well, the stablecoin will also be incredibly volatile. Or if the US dollar is flat, well, the stablecoin will also be flat. Now, that's really what is tying into the volatility. Now, another portion of this that is going to underscore it is there could be differences in different stablecoins, because the way the legislation is set up is to enable the coin to be backed either by US dollars directly, that is actual holdings of US dollars, or alternatively equivalents to that, which could be in the form of treasuries hypothetically, albeit with obviously risk parameters surrounding that. So different stablecoins might behave slightly differently, but the goal is for them to move effectively one for one with the US dollar.
And as we watch this high-stakes battle of financial visions between the US and China play out, which of these two models do you believe will ultimately shape the future of money, and why?
It's going to be an interesting one to see how it plays out. I suspect or imagine that China will try to push their e-CNY onto their, well, maybe not trading partners, but certainly infrastructure partners in the Belt and Road initiatives. However, it will run into some challenges because China does have restrictions on capital controls. So in particular, say, for example, you've got that e-CNY, well, you will have issues with how you convert that into whichever home currency you need to make your own payments to suppliers, which does impose a bit of a risk on various parties. So say, for example, you've got a university. Say it gets paid in CNY, but it needs to pay, or e-CNY, so the central bank digital currency, but it needs to pay its staff in my case, Australian dollars. That creates a risk for the university in terms of whether they can convert the CNY into AUD. You compare that with the stable coins, where admittedly they could be quite volatile, but you should, at least in theory, under the US regulations, be able to convert that freely between currencies. So if the CNY or the e-CNY is really going to compete with the US stablecoins, it needs to ensure that you've got actual proper currency convertibility for it to be competitive in the international space.
Mark Humphrey, Jenna from the University of New South Wales Business School, thank you very much for your analysis.
Thanks for having me. Great being with you.